take you through all the stocks that have been in the news over yesterday's budget day. SBI first up, beat street estimates, profits jumped 300% to 3,955 crore rupees. This on a quarter-on-quarter basis, and the management is confident that asset quality too will improve, with at least 8 accounts worth 34,000 crore rupees close to a resolution. Neha Bothra caught up with Rajnish Kumar, the chairman of the bank, to decode the third quarter numbers. Listen in.
Definitely, because what is contributing to the growth in profit? The credit growth, now we are growing almost 16% as far as the domestic book is concerned. Second is that last year there were a lot of clawbacks, almost 9,000 crore from interest income, because many accounts got classified from a retrospective or a backdate. And third is that even the margins have improved by almost 15 basis points, because the yield on advances is higher and we have been able to contain the cost of the deposits. Our deposit growth is mainly coming from the savings bank and some of the bulk deposits, but which are at the card rate. There is no differential pricing which bank is paying. And we don't need to, because our CD ratio still is around 69-70%. And asset quality, I think the situation is very much under control. Fresh slippages are under control. And the provision coverage ratio, because consistently in the last 5 quarters we have increased the provision coverage ratio by almost 1,000 points. And what it does is that in the future quarterly earnings, it puts less pressure. So that's why I consider it to be sustainable.
So the government is set to have set a deadline of 31st March when it comes to resolution of certain big ticket accounts that have been in limbo for the longest time due to legal hurdles. Are you optimistic that perhaps next quarter we could see better asset quality? Perhaps we could see net NPA coming in below 3%. What gives you confidence? And if you could add this and substantiate this with more numbers.
As we have done the analysis, and there are 8 accounts. 5 of them are in NCLT 1 and 2. 3 are in power sector. The total amount is 34,000 crore. And there will be a write back, because we are holding 22,000 crore provision against that. The recovery expected is more than that. And that is where 6,000 write back we are expecting from these accounts. And if that happens before 31st March, then definitely there is every possibility that net NPA figure for the bank will come down below 3 and gross NPA will be around 7.
So what gives you confidence that perhaps the loan exposure to DHFL does not merit much concern at this point? Is it that you have some sort of ring fencing as far as the exposure is concerned? If you could add some more detail on that front.
So one is that there is no pressure on DHFL as far as the CP rollover is concerned. When ILFS crisis happened and all the market, there was turmoil. At that time, their CP was 9,500 crore. Now today it is less than 1,000 crore. The cash budget which we have received, because they have a lot of small loans which are all performing. So the availability of cash flow to service the existing debt or liabilities, whether the loan or the bond, as of now, it does not seem to be under any pressure.